Recording in progress.
Good evening and welcome to the Jash Engineering Q1 FY2024 earnings conference call. Before we proceed to the call, let me remind you that the discussion may contain forward-looking statements that may involve known or unknown risks, uncertainties, and other factors. It must be viewed in conjunction with our business risks that could cause future results, performance, or achievements to differ significantly from what it is expected or implied by such forward-looking statements. Please note that we have mailed the results and same are available on the company's website. In case if you have not received the same, you can write to us and we will be happy to send over to you. To ask questions, please select the raise hand option. We will call out your name and then request you to unmute yourself and ask the question. Please note, the question on the chat box will not be monitored on an active basis. To take us through the results and answer your question today, we have the top management of Jash Engineering Limited, represented by Mr. Pratik Patel, Chairman and Managing Director, and Mr. Dharmendra Jain, Chief Financial Officer. We will start the call with a brief overview of the quarter gone past and then conduct a Q&A session. With that said, I will now hand over the call to Mr. Pratik Patel. Over to you, sir.
Good afternoon, everyone. Thanks for sparing the time and attending this investor presentation for Q1 FY2024. I am not in India, so I am doing this from Europe, where I am presently on a tour. I hope that I am able to answer most of your query, even though I am a little bit not very good at doing this Zoom presentation when I am not in control. Next. So to begin with, first of all, I would like to, I'm pleased to inform you that this is the 50th year of the company. And we are celebrating the 50th year on 29th of September 2023. And we would request all of you who can visit us during that time to participate in our celebrations. Next. As most of you who have been with us on our journey know, we are a manufacturing company. We have 5 manufacturing units as of now with 950 employees, consolidated sales of 415 crore. Our major business is out of India. We export to various countries globally. Together with all our subsidiaries, we have 350 plus years of experience. And we are approved by most of the municipal authorities in India and also out of India. The company is continuously evolving. Over a period of time, we have joined hands with various partners and we have also joined hands with various technical collaborators to reach where we are today. In the process, we have also acquired various companies. Next, various companies like Shorsil in 2009, Shivpal in 2011, Maha Machine and Bow in 2014, Rudniant in 2016, and now we are in the process of acquiring Waterfront in UK. The reason for all this acquisition was either to increase the market or to get a brand name which is relevant in many markets so that we can add to our branding in international market. Next. We are also continuously investing. Every year on an average we have been adding some major facility, and the purpose of that was only to ensure that we have 600 crore plus manufacturing capability, and now we have plans to invest further close to 100 crore in ensuring that we double our turnover from 500 crore this year to 1,000 crore in 4 to 5 years' time. Next. One of the key features of our company has been that we have most of the facilities required to produce our equipment in-house. There are very few companies who have this capability, and this ensures that we can deliver very fast when required, or we don't get stuck up because our vendors are facing problems. Next. I would like to give a brief overview of the products. We are making gates. Gate is our biggest line of business. We produce gates for all type of operations, from treatment plant to pumping station, from dams to canals, etc. And we see a good movement in future, so we are adding further products into our water control gate product line. Core screening equipment, we have one of the finest core screening and fine screening equipment range in the world. And from fine screen such as drum screens, step screens, brush screens, percolator screens, to core screens such as multi-rake screen, Mahar multi-rake screen, suspended rake screen, back rake screen, etc. Next. We also have a very wide range of screening conveying equipment and about a good range of knife gate valves, which I would consider amongst the best range today available in the world with any company. Bulk solid handling equipment also we produce in collaboration with Shooters since last more than 25 years. And special purpose valve and air vessel. These are the products coming from SureSeal line, to which we have added air vessel. Next. Acquisition of Shivpath brought us a big range of process equipment, which comprise of deterrent to remove grit, aeration to improve the quality of water, clarifier, clariflocator, etc. We are also amongst the biggest in Asia now to produce hydropower equipment, which is in the form of Archimedes screw generator, screw pump for flood water pumping, and the latest addition is disc filters, which is required for secondary treatment. Now, most of our products are basically water-based. I would say 95% of the products are water-based, which means wherever water is required, we are supplying our products, be it pumping station, treatment plant, holding ponds, dams, or industrial projects where huge amount of water is required, such as in power, paper and pulp, steel plants, petrochemical plants, etc. As I said earlier, sluice gate is the biggest, water control gate is the biggest contributor to our revenue. 57% of our revenue in this quarter has come from sluice gate. 13% of our revenue in this quarter has come from screening equipment. 23% of our revenue has come from varied valves, and 7% of our revenue has come from process equipment and also screw generators and pumps. As we grow, you will observe that most of our revenue is now started to come from outside India. In this quarter, our revenue within India is around 27 crore and revenue outside India is around 36 crore. Now, this is how we would like to go forward and ensure that revenue outside India is close to 65% and revenue within India is 35%. We also export worldwide, so we are not only concentrated in some places. Depending upon which consignment goes in which quarter, the proportion of one zone to another zone may change from time to time, but the fact remains that we are very well established in Far and Southeast Asia, Middle East, Europe and Africa, and USA. One of the biggest need in our business is approvals. Approvals by big clients, approvals by big consultants. We are approved by most of the clients and consultants in India as well as out of India. So in the international market also now we are very well known, and this can be seen from our increasing business prospects in the international market. Coming to the financial performance of the company, we are pleased to announce the results for quarter one. However, those who have been tracking this company so far are aware that the financial results in quarter one are always very subdued. We have been trying to improve this, but because most of the revenue is coming from those countries which were sometime or other ruled by British government, where April to March is the financial year. As a result of that, our turnover gets affected in quarter one, where everything is slow, starts picking up from quarter two, reaches its peak in quarter four. So I'm sure that whatever the results you see today has to be seen in that perspective, and also the fact that we have been warning about this since last 4 or 5 years when we were holding the investor conference. Coming to revenue of most of the companies, performing companies in the group has grown. Jash Engineering has a significant increase in revenue. Shivpal had 10% increase in revenue, and Rodney had that significant high percentage of growth in revenue. That improvement also is there. So Jash had some improvement in profitability. Rodney had losses vis-a-vis past year, same quarter has reduced little bit, and also that of Shivpal has reduced little bit. This augurs well for future because, as I have already said, quarter two onwards, everything becomes better and better. If you see the consolidated financial figures, you will observe that the revenues have gone up significantly in the first quarter. Gross profit margins have reduced little bit, but the gross profit has gone up, and same is in the case of EBITDA, which has also gone up marginally. As far as profit before tax is concerned, there has been losses, but in comparison to last year, the losses are lesser. So, as well as for profit after tax. So this, I would say, signifies that there is an improvement even in the first quarter. Showing a consolidated income statement. When we go on to the PAT margins, you will observe that in Q1, our PAT margins last year were much lower in comparison to this year, which shows that even in the first quarter, we are now able to get some improvements done. We hope that it is everyone's concern that we saw always losses on the first quarter. And we are working on it to ensure that we have more and more billing in quarter one so that the losses are reduced. Next. Coming to business outlook, I am pleased to inform that we have a very, very strong order book position. Our cumulative order book position, including those of subsidiaries, has reached 829 crore, which is the highest so far. Out of this, 238 crore is business within India, and 591 crore is business outside India, projects outside India. This augurs well in the long run because this will ensure that our profitability improves because margins outside India are better. Also, projects outside India are completed mostly within time, and this ensures that we are not hit by reduced margins due to stock blockage. Our consolidated order pipeline also is quite good. We have shown only for the month of August. But overall also we see a very positive inflow. We are negotiating some very big orders, which if come through can ensure that our order book position will cross over 1,000 crore by end of Q2. We still maintain the same sales outlook. At the beginning, we had informed that we are looking at anywhere between 500 to 525 as a consolidated sales for this year, which is more than 20% increase over last year. As of now, we still feel very confident of achieving that. And the movement in the business, international as well as domestic, is still smooth, and I see no reason why we should not achieve anywhere between 500 to 525 crore revenue this year. I would like to brief about some other developments. We are adding up onto our existing head office building by making one more floor where we will be housing our new design teams, and also the new Jash Invent office. Jash Invent will start operations by end of this year, and so we are building an office dedicated to that team. At Unit 2, we are setting up a very big facility to produce stainless steel products. The existing facility would be shifted here because this is a somewhat bigger area, and this will ensure that we have very high level of segregation. In comparison to SEZ, it was not as good as SEZ before, but now with this expansion, the segregation of carbon steel and stainless steel would be as good as we have at SEZ plants. Already we have very good facilities, but we are improving upon that by adding certain equipments even in each of our plants, and this would ensure that by end of this year we have one of the best and most equipped manufacturing facilities in the world for our type of products. Finally, I would like to inform that we are progressing quite well in the process of acquiring 80% stake in Waterfront Fluid Controls, UK. We hope most of the legal, financial and tax due diligence will be over by August end, and we will be able to sign the agreement in September and ensure complete acquisition of 80% share by December of this year. I would like to inform that acquisition of Waterfront could be quite positive for us for the UK market. In the UK market, as of now, the largest player, that was Hambecker, has closed down because of bankruptcy. This opens a very good window for us to go ahead and grab the British market. British market is close to 150 crores, and this is close to 250 crores, of which Hambecker had close to 150 crores. And so we believe that by acquiring Waterfront and bringing the same model which we had in America, we would be able to acquire a large portion of the market which Hambecker has vacated. And that's why I'm quite positive about our acquisition of Waterfront Fluid Control, bringing us good fortune in future. Next. In the end, I would like to say that as always, the first quarter is subdued with us. The materials which are ready also were not delivered in the first quarter. However, this has been continual every year. We have had 18.3% growth in standalone, but our subsidiary were not able to achieve a large growth as we had envisaged. However, we are quite confident that in Q2 we would be able to present to you an improved performance. Overall, as I said, Q1 profitability vis-a-vis the same period last year is on the improvement side. And so we expect if the same performance comes in Q2, then overall we would have a much better year this year. Next. I would like to say that our shareholding pattern has a good addition of employee trust, more than 231 employees out of close to 350 odd employees. This I am talking of is staff, not the workers, are now co-owners in the company. They have stocks in the company, and the employee having stocks is gradually growing. And I expect that more than 80% of employees would have stock in the company, resulting into more commitment by them and also increasing their worth and similarly their faith in the company for future. Thank you.
Thank you. We will now begin the Q&A session. Gentle reminder to all the participants to ask questions, please select the raise hand option. We will now wait for a moment until the questions to assemble. Mr. Naveen, please unmute yourself and go ahead.
Thank you for the opportunity. Pratik sir, this is with respect to the business environment. We have seen a very good order inflows. How are you reading? Where is this orders coming from, and what is your outlook for the future, especially in the US market?
So, if you had seen the press release which we had given, out of close to 112 odd crore order which we have received last month, close to 85-90 crore worth of orders are from US. We are quite bullish about the US market. I believe sooner or later US market would become bigger for us than all markets. We also see quite a good improvement in Far East and also some improvements in Middle East. So I would put it like this, that as far as business sentiments are concerned, export will drive the company, but at the same time we have also very strong, solid order book position within India, and that also is improving from time to time. So I am quite confident that we would not see, generally we will not see any setback during the next year, which is the election year, because our order book position would be quite strong by then. So I am quite hopeful of a very strong order inflow in coming years.
With respect to India, do you see any pickup in orders on the industrial side also?
Orders in the industrial side are increasing, but not in proportion to the municipal. This business is still quite low.
Okay. Thank you. I'll get back in the queue.
Yeah. Thank you, Naveen. The next question is from Mr. Sanjay Shah. Please unmute yourself and go ahead.
Yeah, am I audible?
Yeah.
Yes.
Yeah, thank you, sir. Sir, thanks for the opportunity. So I need to understand from you, of late we have been reading about flood, which becomes a very big concern to the world at a large. So what opportunity that throws to us as a Jash Engineering? Can you highlight upon it?
So this, Sanjay, has become a big issue in the recent time, and it is on account of climate change. If you see, every city gets rains which are huge in comparison to what they've been getting in the past. And these rains fall within a short time, 1 day or 2 days, leading to flooding in the cities. So this is on account of climate change. However, there is another issue also on account of climate change which has become very critical. And that issue is about the sea level going up. Sea level are going up. I was invited to Singapore by the consultant Royal Haskoning, and Singapore expects the sea level to be 800 mm above, going above from present 800 mm by 2100, which would mean that many of the low-lying areas of Singapore will get flooded. So they have already started working on flood barriers, and they are in talks with us and companies like us to offer solutions which would it would ensure that they do not have flooding. For your knowledge, Jakarta is sinking 8 inches every year. By 2030, greater part of Jakarta would be below sea level. Now just imagine, in that case, when rain comes, the rainwater does not drain out. The same happened in Bombay many years back, that there was high sea levels and excess rain came, as a result of which the water could not drain out of the city, and that resulted into lot of deaths and lot of damage to the property. For us, though it is not a good thing, but for us it opens up a huge business opportunity. In Kuala Lumpur and in Malaysia, we have supplied in the recent time big pumps, big flood prevention pumps, which can push out water to the tune of 6,000 to 8,000 liters per second. Now this type of equipment more and more would be required. Flood barriers would be required more and more. In fact, we are in the race to get a very big job in US, which is flooding by Hudson River in New York and Manhattan. And we expect that job to come through by October if everything goes as per the plan. And that job would be one of the biggest in our history, and that is on the account of flooding. So flooding is becoming a very big issue. Only problem is, to tackle that issue, governments, cities would need money. After COVID, I think some cities will take a lot of time to recover. And so as and when they recover financially, they would have to start investing into flood protection systems. Otherwise, those cities would have a lot of losses in future and lot of debts. So, in short, it presents Jash Engineering and companies like us a very, very high potential in future.
That was on my side, and welcome Mr. Sute and Jash team. For concluding, thank you for an opportunity.
Thank you.
Sanjay Shah. The next question is from Mr. Dilip Kumar Shahu. Please unmute yourself and go ahead.
Yeah, hi, Pratik Bhai. Can you hear me?
Yes, I can hear you.
Yeah. Pratik Bhai, a fantastic order book. 4-5 years back when I became an investor in Jash, I never thought we will have order book pending of 800 crores. It's awesome. Jash Bhai, Prakash Bhai, my question is, regarding the UK acquisition, we are acquiring 80% and the other 20% is going to be with, is there a option to buy that in future, or is it going to be 80-20? That is question number one. Question number two is, what is the mechanism? Are we, if in the last Concall, you had talked about equity plus cash for this acquisition. Can you just let me know what would be the equity dilution we will be having in this acquisition? So that is the second question. And in the third question,
can I reply to first two questions?
Yeah, sure. Please go ahead. No,
if I remember well, your first question is whether we can take 100% of the equity. Yes, that option is there in the shareholder agreement, that if they want to sell, we are the first buyer. Okay. So that option is always there with us. The second question you had was which way we are going to give the payments to them. So 20% of the agreed value we are giving as upfront money cash, and 80% we are going to give as equity of the company of Jash Engineering, and that would amount to dilution by around, I would say, roughly 1.2 to 1.35%.
Below 1%. Because actually 30% is the cash and 70% is equity.
Okay.
So it's below 1% is the consideration more or less. If you do 1500 or whatever.
Yeah. So in short, there is no significant reduction in the dilution in our holdings.
Sure. So, the next question was, we had a plan for Rodney Hunt of starting up a new facility. If I remember, in Boston, the new manufacturing facility, as well as moving on to a corporate office. So, is that investment underway? And can you give us some guidance on the timeline and the quantum?
Yeah. So last week I was in Houston, and I had gone to Houston for that only. What happened was, when we bought the plot, we were not aware that there is a pipeline going from underneath it. Our surveyor came out with an ExxonMobil pipeline going from underneath the plot diagonally, which would have reduced the area of plant which we could have made. So I was in Pearland city office, and we had meeting with the top officials of the city. They themselves had not, in the city plans also, that detail was not there. However, it turned out that this ExxonMobil pipeline has been abandoned for more than 40 years now, and Exxon has told that we can build around it, because that pipeline is already broken in various places where it is passing through, because people have constructed at various places on their plot where this pipeline was passing through in past. So now that worry is no more. But because of that worry, we were not able to make any plans of the size of the plant, etc., etc. Now that is resolved to a great extent. Unofficially, officially, they have informed us that they will clear it by end of August. So once we have the official confirmation, we will need 3 months to develop our plant layout and plans, architectural plans, and another 3 months for approval of the same from Pearland Authority. So I am looking to start the construction activity sometime in March 2024. And I had meetings with the contractors also, and they have assured that the whole plant can be built within 10 months. So we are looking at something like February-March 2025 for commissioning of that plant in Houston. As far as Orange, near Boston, the existing Rodney Hunt plant is concerned, I had meeting with city officials of Orange town also, the town officials. And the town is interested in investing money in building a broadwalk on our plot, fronting the river. So I had a discussion with them, and I had requested that we can give the permission to build a broadwalk, provided they also bring sewage and water facilities alongside the Broadwalk. The town has verbally consented to do so. If this thing happens, in that case, the vacant area available with us the worth would also go up, but would be then converted into residential area, which is a riverfront housing development. And we are now looking for how the town comes back to us. If that happens, we expect over the next 3-4 years to sell or to co-develop in part without investing. So land would be ours, someone will develop, and whatever is the assets sold, we will get 20% of it. So co-developing a big area for residences on the face of the river, and this should gradually bring to us anywhere between $6 to $10 million in time to come as the land gets developed. So disinvestment of the land and investment in a new plant, both are on. Meanwhile, in Orange, we are already investing in new facilities to ensure that from Orange we can produce much higher than what we are producing today. Incidentally, we are also getting AISC certification in Orange, and we will be the first company in America to have that certification in carbon steel for hydraulic structures.
Yeah.
So at the end, both plants will remain. There would be the old plant at Orange, and there would be a new plant in Houston.
Sure. Can I ask the last question, or I will come in the queue? Okay. Can I ask?
Go ahead.
Yeah.
Go ahead.
This is regarding this Mumbai metropolitan large project which got, I think, decided a year and a half back. As you have indicated, it will take 2 to 3 years for the order placement to happen. So, has the process got initiated, Pratik?
We have already got 2 orders now. So the process has already started. Now they are on a very fast mode. I expect that all the 6-7 projects which have been awarded, most of those orders, I think we have got 2 orders already in hand. One is negotiated and is supposed to come anytime. So overall, I would say out of 7, we have already got 3, and we expect further also balanced projects to come to us.
Okay. Thank you, Pratik.
Thank you. The next question is from Alisha Mahawla. Please unmute yourself and go ahead.
Hi, sir. Good evening. So first question, will we require to make any investments for waterfront on the team side? I do understand that 20% will be retained, but even in Rodneyhunt, eventually we had to send people from here to build the team. Will we have to make those kind of investments in waterfront?
We may have to send 1 or 2%, but not much, because waterfront presently has only 13 people. So at most, I see waterfront becoming a company of 30 to 32 people in 4 years' time, when we are able to increase its turnover from existing 3 million to close to 10 million. So I don't see lot of addition of people, though there would be investment in waterfront to the tune of 400,000 to 500,000 pounds. We have to share 80%, 20% would be shared by the current owners. However, for that also, major part of that also, we have already got a grant from Scottish government, which means that close to 40-50% of that also will be subsidized by the Scottish government.
Okay. And this investment will be done in this year only, FY24?
Yes.
Okay, got it. And you mentioned that there was delay in billing because of some one client. Was this on the domestic side or export side?
Both sides. Tata Projects also, and Co Brothers and Sanli also in Singapore. So domestic also we had some delays, and in export market we had some delays. export market was as a result of our not being able to open performance bond because of the banks, Reserve Bank of India strict norms which are not being accepted by Singapore banks and so on. But that has been resolved now.
Is it possible to quantify how much revenue we lost this quarter because of these 2-3 projects delay?
I would say between 15 to 20 crores.
And as of now, have we got this money? Are these orders executed, or there is still
These
a bigger
products
issue?
were already made. They could not be built. But now most of the issues are resolved. Tata project first lot has left. And also Co Brothers material is now leaving. It will leave within this month. And also Sandy material will leave within this month. The Sandy had this problem of bank guarantee, which I am not day to day aware of what is happening, but it is a rough idea that within August we should be able to dispatch that also.
Okay. The reason to ask is just to understand that there's no bigger issue on a client side where there could be a larger problem. That was the reason.
No, there are procedural issues. In case of Tata's, the problem was it is an NPCIL job, and NPCIL inspection is very vigorous, and so could not be done in time because of the lot of pressure they also had on the end of the quarter, and so the inspection got deferred to after the quarter, that is in July, and then the inspection was done. The first lot has left. The second lot also must be in the process of leaving. So it's not it's mostly procedural as far as banks are concerned. Everyone has their own position. No one wants to dilute, and we are being tossed around by both the banks, the client bank as well as our own banks. But there's nothing. It has eaten 6 to 8 weeks, but that's all. Nothing now.
And so comment on margins, either at the gross, both at the gross and the PAT level, because last year there were some legacy orders or orders where margins was an issue because of RM inflation. Have we executed that? And last year we did PAT margins of close to 12.5%. Can we maintain that this year or do better?
We hope to better it, no doubt, but maintain that we will. The reason we hope to better is that as the prices have stabilized now, 1, 2, the dollar rates or the foreign currency rates have appreciated. So the margins which got hit is now no more an issue with us.
So at gross margin level, like we did last year, 57 odd %, that should sustain, right?
Yes.
Sorry?
We are looking at 500 crore revenue with around 55 to 60 crore profit after tax. So 12% to 12.5% profit after tax.
Okay, got it. Great. Thank you. Best of luck.
Thank you.
Thank you.
A gentle reminder to all the participants, to ask the question, please select the raise hand option. The next question is from Mr. Jiten Parmar. Please unmute yourself and go ahead.
Good evening, Pratik Bhai, and the whole Jash team, Dharmendra ji, and all. Congratulations on a fairly decent set of quarterly numbers. And of course, the order book is something which gives us a lot of confidence. I just have one question, basically on the waterfront products. How much is it differentiated? I mean, are they similar products which we have, or is there a difference, or if you can throw some more color on that?
So the product line of waterfront, 90% of products are water control case, the same as ours. Out of their revenue, 30% of revenue is because of Jash. So if they have 3 million pound revenue, then more than 1 million pound revenue is coming because of the products which Just supplies to them and they supply to the market. So it is full synergy between Just and Waterfront as far as products are concerned. But Waterfront did not have the financial strength and the marketing strength and product strength. When I say means product strength is they were more of HDP gate manufacturer. For stainless steel and all other type of gates, they were dependent either on Just or someone else. So now we'll plug this gap by producing stainless steel gate for fast requirement within UK and for long gestation period in India.
Okay.
So
Okay.
the same model which we have for Rodney Hunt could be applied at Waterfront also.
Okay. Okay. So does this...
Only difference, just let me clarify, only difference between Waterfront and Rodney Hunt is, Rodney Hunt we started from scratch.
Right.
In Rodney Hunt, we did the recruitment. Now when we do the recruitment, we are not aware about the factual position. So we go by hearsay that this person is good and this person is not good. And based on that hearsay, we select people and then turns out that those people were not good enough. Here it is already a going company and going profitable company. So, and because we have retained the promoters by giving them 20% share, so they are in the industry, they know everything, and hopefully they will not do the same mistake as we did in recruitment in Rodney Hunt. So we took few years to get the act right. They should be able to do it from day one.
Right. So the curve which we had to go through in Rodney Hunt, hopefully that, basically scaling up curve will be far lesser in Waterfront is what I understand.
Yes.
Okay. Okay. And do they have any other accreditations or something which can open new doors?
So they are already, the Scottish Water Framework Agreement, they are part of it for water control gates. And now with Waterfront and Just together, we will be applying for accreditation with all the other water authorities in UK. There are 8 to 9 water authorities. And if you are acquired, if you get these accreditations, then it is a given that you will get huge amount of business with all these companies because you have the first right of refusal thereafter.
Perfect. Perfect. That's all. Thank you, Pratik bhai, and wish you all the best for this year and beyond. And hope we have a long journey together.
Thank you, sir.
Thank you. Next question is from Mr. Ashish Rampuria. Please unmute yourself and go ahead.
Thank you. Pratik, just one question from my side. See, I just wanted to understand, we have almost had a 30% increase in revenue vis-a-vis the, from a YOY basis, right? Despite that, I think by sort of, we had, on a value term, we had less losses. But, any reason why we are still not profitable? Is it because we are expanding and hence those sort of costs are being part of the P&L? I'm just trying to understand the reason for not being profitable despite a 30% jump in revenue.
So if you see, in case of Rodney Hunt, since you do not have all those details, but in case of Rodney Hunt, Deloitte has ensured that certain stocks which we had in America, they have asked us to revalue them and reduce the prices. The reason for that is they consider it as a slow moving item. Myself, if you go by my experience, I will never consider them as a slow moving item. Those were stocks which we are maintaining for our quick ship program. The quick ship program means that if someone needs a gate, he will come to us, and if we have that in our stock, we should be able to supply that within 10 to 15 days. To do that from India is not possible. So you have to maintain a huge amount of stock in America. Now, when you maintain a stock in America for any product, it happens that some years some size will be sold more, some year another size would be sold more. But sooner or later, most of that gets sold. Now, one can say that it is not sold for 2 years, or it is not sold for 3 years, so it is a dead stock. I do not believe that, but we have to sometime also go as per what the auditors say, and that has resulted into close to 500,000 reduction in stock valuation in Rodney Hunt, resulting into major loss for Rodney Hunt. Otherwise, Rodney Hunt would be nearly like break even. Similarly, you are aware that the more business we do in export, the more profit we make. But in the first quarter, standalone Jash Engineering export has not been very high. And that is one of the reasons why overall product mix and export both have been not very favorable, and that is why the amount of profit which should have come has not come.
Got it. So, if I may put it this way, if we did not have those problems of revaluation of inventory per se, right? At what revenue run rate, right? A 65 positive, will be a 60 crore or 65 or a 70 crore that we should be sort of by and large
profitable in quarter? Yeah, I would say if we do 80 to 85 crore, we should be profitable.
Got it. Okay. Thank you. No more questions from us.
Thank you. That was the last question for today. I will request Pratik sir for a closing comments.
Thanks for patiently listening me out. I would like to reaffirm here that we are as concerned about the quarter one result as you are. In spite of our warning everyone, people still expect quarter one results to improve, and I understand their concern. And we are working on it. We do hope that by next year, this type of seesaw would stop. And I am putting pressure on my team also that we become much more aggressive in pushing our clients to ensure that the deliveries plan are taken by them. It's not that we just produce and stock it because they are not willing to lift it because of whatsoever reason. So, in the long run, the company also understands the concern of all our investors and stakeholders, and we are working hard to ensure that from quarter one, quarter two, we have more equal distribution in each quarter rather than this seesaw which is happening presently. Other than that, I would like to reaffirm here that we are in the front of the race. We are opening new markets, and I am sure if all our decisions and strategy comes true, then this company would be doing much better than what I have been doing so far. And I wish to reassure you that what you see as increase in order book is not by luck or chance. I am quite hopeful that when we meet next time, I am able to inform and announce much better order book position than what you have seen. And that will give you an assurance that our investment in Rodney Hunt finally is coming to maturity.
Thank you. Thank you everyone for joining us today. If you have any additional questions, you can reach out to us anytime. We wish you a good health and look forward to seeing you again in the next quarter. Have a good day. Thank you.